Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So today we'll be talking about the top highlight events that are expected to be moving the markets today as well as for the week. We'll also be doing some technical analysis, try to understand the current chart patterns and where they are headed next. And once we do this, hopefully everyone will be able to trade from an informed perspective. As always, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So we'll be starting with the economic calendar. So kindly give me a sec. Okay, that is done. So let's get to progress. Good morning, Dave. Thank you for being the first to join and comment. I can see I'm Kay in the morning. In the house. Good morning. So as you can see from the economic calendar, we don't expect a lot of stuff to be happening today. So already the big news of the day have already happened earlier this morning, where the Reserve Bank of Australia decided to hold interest rates steady at 3.60% as expected. Then later presented the RBA monetary policy statement as well as the RBA rate statement. Then a follow-up press conference at 7:30 a.m. So some of the key highlights from the meeting can be seen in the statement. So try to skim through it quickly. So headline inflation increased to 3.2% in year-ended terms in the September quarter. Of course, 3.2% is about 0.2 percent points higher than the central bank target. So inflation is on the rise again. So underlying inflation picked up in the September quarter by more than was forecast in August. On the other hand, the other mandate of the central bank is making sure unemployment is really low at full employment. So the unemployment rate has increased a little, but a range of indicators suggest there's still some tightness in the labor market. So that is not a worst data point. So as a result of the rising inflation, that's when they decided to hold interest rates steady. So on the GDP side, the central bank's words are simple. The recovery in Australian GDP growth has continued broadly as expected. So the only reason they didn't go for a cut is mainly as a result of the rising inflation. So on global terms, global economic activity has been more resilient than expected. So that was not a point of concern. Some capacity pressures are expected to remain in the Australian economy over the forecast period. So yes, they know there could be some unseen productivity issues ahead. On forecast, GDP growth is forecast to stabilize around the economy's potential growth rate. So on that side, they are good. Labor market conditions are also not expected to ease much from here. So the outlook for inflation has been revised slightly higher. The target is usually 2 to 3%, and in this case, they are projecting the same until the second half of 2026, largely reflecting the strong September quarter outcome. So clearly, nothing much of a change, and as a result, they decided to hold interest rates steady at the current level of 3.6%. So we'll be watching the market reaction later to try to understand how the market was processing this. So on the other hand, there is quite a number of things brewing up in the markets. On one side, 3 more Fed officials are unsure about December rate cuts. So we know that the market has been largely pricing in another rate cut after we got one about a week ago. 3 more Federal Reserve officials have joined the ranks of other Fed officials who expressed doubt about interest rate cuts in December. This is from Yahoo Finance Fed correspondent Jennifer Schoenberger explains what you need to know. So it's a video available on Yahoo Finance. I can share the link if you want to go through it later after the presentation. So I'll put these in the comment section. So other than that, an update on what's happening in the markets today. The Dow, SP 500, Nasdaq futures drop as Wall Street waits for latest key earnings tests. So the latest company to report earnings was after market close last night, Palantir, one of the top AI companies. And despite reporting better than expected earnings, the company's stock plummeted, really went down. So if we look at Palantir stock, just show you this quickly. Trading currently at $207 per share and a total market cap of $491 billion. We saw the company rally 3.35% ahead of earnings, but then in after-hours trading, after reporting the earnings, the stock fell by 4.26%. So the expected market open today will be $198 per share. So this kind of volatility is not foreign, especially for AI stocks. We have seen it happen over the last couple of days. So looking at a map of stocks and how they have performed over the last 5 days, beginning with SP 500 companies, you'd see the increased volatility for some stocks. For instance, Palantir was up 9%, now it's down 4% before market open. You look at Oracle, it's down 8.37%. Nvidia is up 8%. Amazon is up 11%, and Meta, the mother company to Facebook, is down 15%. So it has been a week of mad volatility. You look at automatic data processing, down 8%, and you can see a majority of the stocks in the SP 500 have been doing almost double digits, either up or down, but with a majority of the companies in the red, meaning that the entire SP 500 has been moving downwards. So you look at United Healthcare, down 8.8%. You look at International Intercontinental Exchange, down 8.91%. So it has been a week of increased volatility, and in such situations, you can either become defensive in your trading, or you can get greedy and take your chances. If you don't know what you're doing, you're better off not doing it. You look at the Nasdaq, it's the same thing, same kind of activity, with a company like Synopsys being down 4%, Palantir up 9% and now down 4%, and you look at T-Mobile US, down 7.87%, Comcast down 8.29%, and many other companies. For instance, which is usually a top performer, is down 5.57% in the week. You look at Texas Instruments, down 0.469, and these are companies in the microchip sector, and mostly a section or a sector where Trump has been making a lot of deals in order to bring semiconductor manufacturing to the US. So a lot has been happening this week, so you have to be a bit careful. On the crypto side, this is where it's worse and really bad. So for crypto traders, I don't think it has been very fancy. BTC down 5.32% in the last 1 week, ETH 10%, XRP 10%, Solana 15%, Doge 12%, Tron 5.91%, BNB 13%, Cardano 11%, Sui 14%, Litecoin 13%, and so on. So clearly, there's no single one that is among the top cryptos that is in the green. Almost all of them are in the red. Some of them doing double digits, and others even up to 20%. So it has been quite a surprising dip, but with crypto, you know that whenever you see such a drop, most often it's an opportunity to buy, especially for Bitcoin. So that has been the case of the week. And now going forward, what are the questions to ask ourselves? So I'll be starting with this Friday. This Friday is the first Friday of the month. This is when we are expecting the non-farm employment change, which is the non-farm payrolls or the official job report of the US economy. So here in the bottom on the calendar, you can see something highlighted in yellow. US government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. So you can see this data point is labeled as tentative. So the market is very confident that unless some magic happens and let's say the US government shutdown ends today or tomorrow, then most likely we will not be having the non-farm payrolls this Friday. And that has been the issue since the government shutdown started, which means that a lot of trading activity is based on speeches, either speech from the Fed chair or speech from FOMC members, and mainly speeches and tweets from Trump. Those have been the market movers, and that may explain why we are seeing extreme volatility in the markets. So for the day, what do we have after the AUD news earlier this morning? So we just got Spanish employment change, unemployment change. Here, there was an increase of 22.1K, meaning that this is the number of new people who reported that they lost their jobs, and that is in the last 1 month. So clearly, this was a big shift. Then we get into a speech by ECB President Lagarde at 1 p.m. Of course, this is expected to be a big mover for Euro USD traders. So on the Fed side, FOMC member Bauman will be speaking at 2:35 p.m. And remember what we mentioned, 3 more Fed officials unsure about December rate cuts. So we know that Fed officials tend to vote for these things. Every meeting, they have to vote on a decision on interest rates. So when you have more and more Fed members speaking, you can even keep a data tracking how many have spoken and what they are saying. So in that regard, it basically means that for the expected member, Bauman speaking at 2:35 p.m., we'll know whether there is one more member who is unsure of the December rate cut. So that's the approach out of investors and traders are taking. So that if a majority are in support of a rate cut, then the market starts pricing that in. So MPC member Breeden will be speaking for the UK economy. TIP economic optimism index is tentative, so there's still scarcity from the US side on economic data. GDT price index is tentative. German Bubo President Nagel will be speaking at 8 p.m. Low impact expected, and Reserve Bank of New Zealand financial stability report. This will be at 11 p.m. So fast forward to tomorrow before we get to the next market snapshot meeting at 11 a.m. We'll also be expecting the job market data from New Zealand. We're expecting an employment change quarter over quarter of positive 0.1%, a flip from negative 0.1%. So then unemployment rate is expected to have increased from 5.2 to 5.3%. Clearly not desirable. So if you get 5.3 or higher, this should be negative for the New Zealand dollar. So you'll get monetary base year-over-year data from Japan and monetary policy meeting minutes. These are the same as the meeting minutes we see from other central banks. I'm sure you all know about FOMC meeting minutes and how they impact the dollar. So the same case will be applied here. And remember, this was the first monetary policy meeting since the Japan got a new prime minister. So there could be a lot of changes compared to the prior meeting, and this could drive the markets, especially the finer details of what was discussed in the markets. So expect some volatility from the JPY pairs at 2:50 a.m. and also on the Nikkei 225 index, which is the benchmark index for the Japanese stock market. So other than that, we'll be getting low impact news. We get the ADP non-farm payrolls change. Remember, ADP is done by a private company. So this one is expected to be the only accurate measure that at least gives a hint of how the US labor market looks like right now. So The company that does this is called Automatic Data Processing. It measures the estimated change in the number of employed people during the prior month, excluding the farming industry and government. So this data provides an early look at employment growth, usually 2 days ahead of the government released employment data that is designed to mimic. Source change series calculation formula in February 2007, DEC 28 in November 2012 to better align with government data. So clearly, we know that job market data tends to correlate well with the currency. So when you see a lot of employment being created in the US economy, it tends to be positive for the dollar, and the opposite is also true. So the way they do it, they analyze payroll data from more than 25 million workers to derive employment growth estimations. So this will be a key data point because we don't have official non-farm payrolls. So for US dollar traders and US equity indices traders, this will be the point of focus. So also another private data will be from the Institute for Supply Management. So the ISM services PMI will show us how the services sector is doing. Remember, this is a level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So what they basically do, in very simple terms, they look at the services sector, any company or business offering services in the US economy. And then they'll ask them about their orders. And of course, their purchasing managers get their orders ahead of time. So when they share this report with the market, we're able to track how the services sector is performing. So when there's more orders, it shows that there's optimism and people have increased purchasing power. It's usually a good indicator about the economy and the dollar. On the other hand, if the services are bad, like people are not ordering services at the same rate, then that tends to be quite negative for the dollar. So other than that, the Bank of England will be on focus later this week on Thursday at 3 p.m., where we will be focusing on whether they will be cutting interest rates. And the main focus will be on the votes themselves, not the percentage point. Because we don't expect a change, so from 4%, we expect the data to remain the same, interest rate to remain the same at 4%. Then the question will be on the voters. Remember, there's 9 monetary policy members in the MPC committee UK. So they vote in an XXX format. You can only vote on one side. So you can either vote for the first number, which is to show whether you're voting for increase, second number, decrease, and third number is holding rates. So in the prior 2 meetings, you'll notice that there has been a consistent 0. So nobody is voting to increase interest rates. That's the first number here. So the second number is voting for rate cuts. So here is where you need the majority if you are expecting an interest rate cut. So in March, there was only 1 member voting for a cut. Then in May, there were 7 members voting for a cut, and they did go for it. Then in June, only 3 members voting for a cut. They didn't cut. Then in August, 5 members were the majority compared to 4. They had a cut. Then in September, only 2 members went for a cut. A majority were 7 holding, so they didn't cut. And now we're expecting 3 to 6. So 3 to 6 shows some level of confidence that there's double the number of MPC voters who will be going for holding interest rates compared to those who will be going for cutting interest rates. So it's within reason to expect that there will be no cuts on the next meeting on Thursday, and the market is already reacting to that information. So that's just about it on the economic calendar and the things we're expecting from the charts. So I would like to take a quick break where I introduce you to something that we have been really working hard to get. And this is concerning the Bullish Banter podcast. For those of you who know about the podcast, we cover a lot of topics. We interview a lot of traders. In the last one, we covered we hosted a very good trader called Ibrahim. We covered his forex journey and how he quit his other business to become a full-time trader. So there's a lot more resources you can learn from this podcast, and we've been doing this for 3 consecutive years. So now we feel the need to connect with the community, and we have now organized a physical event where we get to meet with our traders, we get to interact. We'll have a huge debate on what is the easiest market to trade, whether it's crypto, forex, commodities, or indices. So the event is free of charge. It will be hosted by myself and Jesse Ogora, powered by FXPesa, and we'll have a lot of attendees and a very big panel with a lot of experience in the markets. So some of the guys that will be on the event, I just want to give you a quick highlight. Where is that? Yeah, if you have met Tim Bear on the podcast, he will be there. If you've met George FX Mastery, he will be there on the panel. Miss Gathoni will also be there, and Stormzy will also be there. So people with diversified opinions in the market and a lot of topics to discuss, including the state of trading in Kenya today, regulation and trust in the markets, trader culture and community, opportunities and challenges, future of trading in Kenya and East Africa, and personal journeys and lessons from each of the panelists. So it will be a very interesting event. I'll be sharing a link in the description below. So if you're watching this on YouTube, it will be available. If you can't find it, let's say you're watching this on X, check my pinned tweet. You will find the link to the event. Sign up. Let's get to meet on November 14th in Westlands. So hopefully we get to connect and talk more about the markets. So that being said, let's get back. Let's get into the charts. I know this is your favorite part of the presentation. So chart of the day, without further ado, we had a gap on 27th October. The Nasdaq is falling like nonsense. So good chance that we get to close this gap with this move. So it seems like the market opened with a very strong bearish momentum. And this is something you can compare from a technical perspective to what we would describe from technical trading as a breakout. So if this was some form of consolidation for the last 3 days, then we have a breakout in the house. So we already got to the base of the pattern, but there's still something that seems a bit attractive here. So even though we might get a pullback towards the upper side, it seems more likely that we are crossing this gap. The market goes for 25,355 price action level. So another chart that is very interesting is gold, which has been consolidating for the last 5 days. And now, after a sharp movement, we had strong rejection of lower prices here. And now we are seeing more momentum building, and we are just approaching the opening price of the day, which means we could print even higher. So good chance that we see more bullish momentum, but you have to be aware of this particular trend line, which could be the target area with this bullish momentum. So other equity indices, US 30 already broke the previous high. So if it keeps going, then this previous high here, which was also a bottom here, becomes the new target, 46,705. And US 500 already crossed the gap. So the gap we saw on the Nasdaq was also in the SP 500, and it has been crossed this morning. And now we are seeing we are looking at a potential extension of the bearish momentum. And this seems like a very interesting area for the market to be headed, 6750. So on the other hand, we've had a breakout on UK oil on the 15 minutes and 30 minutes. And it seems like the market is pushing lower. And if you zoom out on your charts, you'll notice that some time back, there are some levels we were watching, and they seems to be retested right now. So potential extension to 63.97, and this could also extend all the way down to the previous support area. This is 63.48. Remember, about a week ago, the OPEC threatened to increase their oil output, And this tends to have a negative impact on oil prices. But as we have seen with previous announcement, that kind of market reaction doesn't happen immediately. So what is it with the RBA? What's the Reserve Bank, the reaction to the Reserve Bank of Australia's deciding to hold interest rates? Of course, holding interest rates is supposed to be positive for the Australian dollar. However, we had a gap here, and the gap was created on 27th of October. And since then, the market has not gotten back there yet. We know that gaps are to be crossed. So we had this period where the market was consolidating. I would say for 10 consecutive days, we were just moving sideways, up and down, up and down. Market gapped up and headed all the way up to a previous resistance area and then started reversing. So that means that our trend line is still relevant and the market has just bounced from that trend line. So you go to a smaller time frame, the 15 minutes chart. You try understanding this kind of momentum, then you notice that the market is reacting immediately and there's an immediate bounce. So if you look at the last 3 days lows and you compare with today's low, it looks like a quick trip down and then bounce, which leads to the likely outcome that the market could be going now for this particular trend line that the market attempted to break and failed. So good chance that we see the market headed for the Asian session high, particularly the high that we saw on the on the Tokyo session. So on the other majors, the pound has just broken out to the lower side. So clearly, even though we're expecting the Bank of England to hold interest rates, this was quite a consolidation for 2 days, and this breakout means that we could be going for liquidity on the last 5 days low, and a potential break below there could move even further downwards in what looks like the dollar strengthening against the pound again. So you start looking at prior candlesticks and potential target points, and this becomes an area of interest. So it's an area where we saw the market finding resistance right here at this point, and at this point. And now we could be seeing the market headed for the same. So a key level test is Friday's low. And if we break, then we head all the way down to 1.30061. So for Euro USD, it seems like the trend is weakening. So yes, the Euro has been taking quite a pounding. And you look at the last 2 days performance, you notice that this is a trend where the strong bearish momentum is weakening. So this is not the same kind of momentum we were seeing in the last 2 days before Friday and Monday. This was yesterday's low, today a quick dip and then bounce, and we head the other way. So also it's important to notice that yesterday's high could be a significant price action area, and we could be seeing the euro attempting to push even higher from here, given the weakness we have been seeing in the dollar since morning. There was a bit of a strong jump at midnight and then a reversal later. But then the dollar index seems to be finding some good support around here. So that may explain the breakout we are seeing in the pound. And that breakout seems pretty strong to me. So dollar Swiss franc, we know that the dollar has been really attempting to make a comeback against the Swiss franc. Majority of the price action after this sharp drop has been more of sideways momentum. So we haven't seen the market go for newer highs in 2 weeks, newer lows in 2 weeks. So now we are testing a high that we had observed here. Market broke towards the upper side. So in this case, a very strong dollar against the Swiss franc, but then a pullback that is met with more bullish momentum. So the story of the week for the dollar trading against the Swiss franc is more of some value areas along this line. And I don't think this is an exemption. So anytime the market has gotten to this particular trend line, found support and pushed higher. So this could be another value area where the market now drives higher as the dollar continues recovering from these currencies. For USD JPY, we had a 2-day consolidation and then a break towards the lower side. We are yet to get to a target, which was a previous high are now turned into a potential support. So 153.215. So you look at the Nikkei 225 index on the 4-hour chart. We've had this channel being a very strong momentum, and this was extended last week. So we get into this week, the market starts falling immediately, but then gets to the same particular trend line that has been working as a resistance, and now it could be turned into a support. And we can already see this playing out, though not enough candlesticks to support an entry for a buy. So UK 100 also falling in line with US equity indices. So a very sharp drop is happening today. There seems to be some form of panic selling. So potential target seems to be 95.73, an area we used previously as a target. Notice when we were targeting this area as a target upon this bounce. So now after we go to the upper side, now the same area becomes very interesting, and the market seems to be gunning down there for the same level. So silver has a very interesting play, and I'll show you this. So we were on a very sharp downwards momentum, and then we found support and the market retested this area twice. So for those of you who like technical analysis, you already know what this is. So we had another sharp fall and recovery, but still found resistance. Sorry, found resistance on a neckline, and now we are dealing with yet another potential drop and get back to the neckline. So for those who know what this is an inverted head and shoulder pattern. We just bounced from this support, and it seems like silver is pumping today. So we could be seeing a very interesting move all the way back to the neckline at 49.33. So it's still a theory. It's shaping up, but then if it plays out, it could be a very interesting trade to play, which is the completion of an inverted head and shoulder pattern. So I believe we've covered a majority of the markets. New Zealand USD really struggling to bounce from this dollar pressure. So it seems like it's pumping even lower. And notice the price action from morning. It was a gap, crossed the gap, and started moving down. So this was the extreme low of the Nikkei session. So we bumped up, and then the London traders have just joined, and they want a piece of the pie. So most likely they attempt to push for another low here. So European equity indices are not safe either. You look at the German DAX, very sharp drop that almost looks like a falling nail. So key level support seems to be here. So we could be seeing the market retesting here, which was a low that we saw 3 weeks ago. EU 50 also having a very sharp drop, almost like panic selling. The French stock market index opened with a big gap down. Remember, gaps are to be crossed, but not immediately. Sometimes the market may take time before crossing these gaps. So given the kind of panic selling we are seeing today, I would wait until I see confidence that buyers are coming back in this market. So it's not the first time it has happened, especially in the French stock market index. Sometimes you'll see these gaps happening like this, the difference between closing price and the opening price. And then we see an extension of that move before reversal and closing the gap. So it's quite normal, especially for these indices, to do this. You find a gap, market extends in that direction, but then eventually covers the gap. So don't think about it differently. So you just wait until you're confident that buyers are really coming back into this market. Swiss stock market index, gap and push lower. So seems like an overall panic. Gap for the Norway stock market index, and for the Netherlands stock market index, gap and push lower. So until this panic ends and you see confidence of buyers coming back, I think it's safe to assume that we continue seeing the bearish momentum. So Bitcoin is not spared too. It's having its moment of bearish momentum, having reached a low of 103,757. So at some point, we expect to see buyers coming back. It's very common of Bitcoiners to kind of take advantage of these sharp movements and then get the market back to the market immediately. So whenever there is a sharp fall due to the community, markets can recover very quick. Notice how we had a big tail here. This was about 4 weeks ago, dropped into 102,000, and within a day or so, the market was up to 115,000. So up by about $13,000 in a day. So that kind of volatility is normal in Bitcoin. So we expect to see buyers building confidence and pushing the price back high. So that's it for the day. I'll be checking the comment section to see if there's any questions. Good morning, Patrick Wanyinge. You can see Lucy in the house. Northern Oasis, Jotech, to trade with Paris. Please talk about the trend in gold. Has the trend turned bearish long term? That's a very interesting question. Given the weaknesses we are seeing in the dollar, I don't think gold has turned bearish in the long term. What I'm seeing here is a market that formed a double top, followed by a very sharp drop, and then another sharp drop last week, and then immediately it got into a consolidation. So what I'm observing is this. After this bottom here, this market was rather in a consolidation. So if I had to draw an estimate from here, I would say this market is moving this way. And the line is still slanted a little bit to the upside, meaning that for the last 6 days, the lows we have been getting in the markets are getting higher, which indicates that confidence is growing back in bullish momentum. Unless we have a breakout on the lower side, of course. So good question. With the US government shutdown, should we expect high impact with NFP this week? And if so, what should be our focus be when approaching gold? So there's no NFP this week because the government is still on a shutdown, and the guys at the BLS are government employees. They were sent on temporary leave. So this means that the market will be relying squarely on the Thursday ADP non-farm payrolls. So that's the key point of focus. I believe we already covered it extensively. The session is recorded. You can reverse back. So we covered the ADP non-farm payrolls. We said the payrolls come from a private company. So the market will be using that as a gauge of the job market in the US. And of course, a strong job market is likely to be very positive for the dollar, and a weak job market very negative for the dollar. LFTJ, please have some peace. This is quite normal, especially if you have been in Bitcoin for a long time. You know, we always get a recovery. Sometimes it's longer, sometimes it's shorter. So another good question from Apollo. Hello, Rufus. What's your view on stocks? Warren Buffett holding a record stack of cash, prices at all-time high, rate cuts only feed Buffett's loaded elephant, and stock market cap at 245% of GDP. I think, yes, there's signs of a bubble in the market. And well, it's easy to start spreading news of doom. What has been happening is the market got overvalued a long time ago, and it has been staying overvalued for some good time now. So we can't borrow into these narratives when investments are being made in AI companies, in Bitcoin, and many other assets and tech. All we've been seeing is the fraud getting higher and higher. So as a trader, you keep benefiting from that. If you're an investor, then you take some form of safety, and that's what investors have been doing by buying precious metals such as gold, silver, and that is to hedge against the risk that the bubble eventually will pop, and they don't want to be in financial ruin. So yes, that is happening, but Donald Trump is spending money like nonsense. So that expenditure is still pumping the markets higher. So also note that Warren Buffett's company has been losing money. In fact, they are currently underperforming the SP 500 by quite a margin now. So I've seen a news article about a scheduled court ruling on the legality of Trump's tariffs. Will this affect the markets, especially indices? Yes, the Democrats have been trying to use the courts to fight Trump because they don't have a majority in any of the US houses, not Congress, not House of Representatives. He has majority senators, majority governors. So uh, the courts have been used to frustrate him. So even if they might win for a short term, the US is basically a legal battle, and these things happen all the time. So as long as Trump is on the wheel, he'll find a way of beating the courts. He has been fighting the courts for the last 8, 9 years. So I think he'll still win. With the trade war between US and China postponed, is it possible to see bearish move on safe haven assets? First of all, I don't trust Trump. Until the Chinese president speaks the progress of their meeting, I don't trust Trump as much. Uh, on the other hand, I think if they make some progress, that doesn't undo the real reason why gold is moving higher, which is central bank demand. A lot of central banks have been buying a lot of gold. Investor demand, a lot of investors have been buying gold because stocks are at all-time highs, and you need to protect your portfolio in case something happens in the stock market. So that kind of hedging has really driven gold higher. And of course, the speculative form of trades have only engineered an even higher movement in gold. So while Trump may be the man influencing the short-term moves, long-term moves look at the people who are actually buying and holding the gold. So that's it for the day. Thank you very much, everyone. Make sure to use the links in the description below to register for a trading account. If it's your first time to deposit, you'll get 100% bonus with a limit of $5,000. So no matter how which amount you deposit, whether it's $5, 100, 1,000, you will get free bonus from FXPesa. The links are in the description below. So also, if you need to learn how to trade Forex, check out the FXPesa website. We have free classes on Zoom. We also have pre-recorded materials on FXPesa YouTube. Search for Novice to Pro. And other than that, I can only say I'm very grateful to you guys for joining the session. Remember to register for the Bullish Banter event. The link is in the description in the comment section. If you're watching this on X, then the link is pinned on my handle at RufusKE. So that's it for the day. Enjoy your day, and I hope you have a profitable week.